Good evening. Tonight we begin with a story that touches the lives of millions of Americans, the cars we drive every day, the jobs that support our families, and the uncertain future of our economy. The United States has just announced sweeping new tariffs on cars and auto parts imported from Japan, sending shockwaves from Tokyo's boardrooms to the heart of the American Midwest. For decades, Japanese brands like Toyota and Honda have been woven into the fabric of American life, becoming household names and trusted companions on our roads. Now a pressing question looms large: are Japanese cars about to disappear from American streets? Could this be the end of an era for millions of drivers? Supporters of the tariffs argue that these measures will protect American jobs, boost local manufacturing, and finally level the playing field for U.S. automakers who have struggled to compete. But critics warn of a different outcome: higher car prices for consumers, potential job losses in related industries, and strained diplomatic ties with a key ally that has invested heavily in America. The auto industry supports nearly 10 million U.S. jobs, from factory floors to dealerships, and Japanese automakers have invested billions in building and operating American factories, creating thousands of local jobs. Now these companies face tough choices, decisions that could reshape not just their own futures but the entire industry for years to come. Tonight, we'll break down what these tariffs really mean for you and your family, exploring the history behind the policy, the motivations driving it, and the real-world impact on your wallet and your community. This story is about more than just cars. It's about people, policy, and the future of America's place in the global economy. It's about the choices we make today and how they will echo for generations. The decisions made now will shape the auto industry, our economy, and our daily lives for years to come. Stay with us as we unpack the full story behind the tariff shockwave. To truly understand today's crisis in the auto industry, we need to look back at the long, intertwined history between the United States and Japan, a story that spans decades and continents. Japanese cars first arrived in the U.S. during the 1960s and 70s. They were small, fuel-efficient, and affordable, qualities that became especially attractive to Americans during the oil crises, when gas prices soared and big American cars suddenly seemed impractical. American drivers quickly embraced these reliable alternatives. The shift in consumer preferences was dramatic, as families sought out vehicles that could go farther on a gallon of gas and required less maintenance. In the 1980s, as trade tensions grew, Japanese automakers responded by building cars right here in America, investing in local communities and creating new jobs. Honda opened its Ohio plant in 1982, a groundbreaking move that was soon followed by Toyota's Kentucky plant in 1988. These milestones marked the beginning of a new era in American manufacturing. These weren't just factories, they were long-term commitments to American workers and their families, bringing new opportunities and revitalizing entire towns. Over the decades, Toyota, Honda, Nissan, and Subaru built a vast network of plants and suppliers across the country, blurring the line between what's considered foreign and domestic in the auto world. Today, a Toyota Camry built in Kentucky often contains more American-made parts than some vehicles from traditional U.S. brands, a testament to how deeply these companies are woven into the fabric of American industry. Japanese automakers have invested over $50 billion in U.S. manufacturing, supporting millions of jobs and helping to sustain local economies from coast to coast. They're not just foreign companies anymore, they're an essential part of the American story, with thousands of American workers proudly building cars for their neighbors. This deep integration makes the current tariff battle especially complex, with consequences that reach far beyond boardrooms and into the lives of everyday Americans. The history is clear. Japanese automakers didn't just compete in America, they helped build the modern U.S. auto industry, driving innovation and collaboration. Now that shared legacy stands at a crossroads, with uncertainty looming over workers, companies, and communities alike. The choices made today will define the next chapter of this remarkable partnership, shaping the future of the American auto industry for generations to come. So what's in the new policy? The U.S. has imposed a 25% tariff on all imported cars from Japan, plus a 10% tariff on a wide range of auto parts. These tariffs, announced July 15th, take effect in 90 days, leaving the industry scrambling. The administration says it's about protecting American jobs and national security, but Japan and even U.S. automakers warn of higher costs, job risks, and a potential trade war. The 25% tariff hits imported vehicles, but the 10% parts tariff could raise costs for nearly every Toyota and Honda built in America. Even cars assembled in the US will get more expensive. The industry is racing to understand the full impact before the clock runs out. The stakes are high for workers, consumers, and the future of US-Japan trade. Toyota and Honda are responding quickly but with a sense of caution, carefully weighing every step before making major decisions. The stakes are high, and both companies know that any misstep could have lasting consequences for their operations in the United States. Both companies have publicly expressed disappointment with the new policy, emphasizing not only their deep roots in America, but also the thousands of US employees and families who depend on their continued presence. They highlight decades of investment and partnership with American communities. In a dramatic move, Toyota has paused a $500 million expansion in Alabama, putting hundreds of new jobs on hold and sending a clear signal about the seriousness of the situation. Meanwhile, Honda is accelerating its plans to localize more of its supply chain within North America, shifting production of key parts to the US, Mexico, or Canada in an effort to adapt quickly to the changing landscape and reduce reliance on overseas imports. These moves are urgent but incredibly complex. Supply chains that took decades to build can't simply be rebuilt overnight. The process involves retraining workers, retooling factories, and renegotiating with suppliers across borders. Both companies insist they're not leaving the US, but they warn that future investments are now uncertain. The climate of unpredictability makes it difficult to plan long-term projects or expansions. Their message to Washington is clear: tariffs won't bring jobs back from Japan, but they could halt new growth and jeopardize the progress made in American manufacturing over the past decades. For now, it's a mix of public advocacy, operational changes, and a tense waiting game to see what comes next. Executives are meeting daily, strategizing for every possible scenario. The future of Japanese investment in America truly hangs in the balance, with billions of dollars and thousands of jobs at stake. The industry is bracing for a new era of uncertainty, as workers and managers alike wonder what the next announcement will bring. The question isn't just about leaving, it's about whether growth will stall, or if the industry can adapt and continue to thrive in a changing environment. The stakes are real for workers, suppliers, and entire communities that have grown around these factories, relying on them for economic stability and opportunity. The next moves by Toyota and Honda will shape not just their own futures, but the direction of the entire American auto industry for years to come. Tariffs almost always mean higher prices for consumers. Analysts predict a 25% tariff could add up to $6,000 to the price of an imported car, more for luxury brands. Even US-built Toyotas and Hondas will get pricier, as the 10% parts tariff adds $1,800 to $2,400 per vehicle. That means higher monthly payments and fewer affordable options for American families. Rising prices could chill new car sales, hurting automakers, assembly line workers, and dealerships nationwide. It's not just Japanese brands. Ford and GM also rely on Japanese parts, so their costs will rise too. Some models may disappear from the market if they become too expensive to sell. The end result: higher prices, fewer choices, and more uncertainty for everyone. The impact will be felt in showrooms and households across the country. The policy's reach goes far beyond its intended targets. American consumers will pay the price. The administration says tariffs will protect jobs, but many experts strongly disagree, warning of unintended consequences. Japanese automakers directly employ over 137,000 Americans, with millions more jobs supported indirectly across the country. Every assembly line job creates up to 8 more in local businesses, suppliers, and essential services that keep communities thriving. Plants like Toyota's in Kentucky are economic engines for entire regions, fueling growth and opportunity. When expansions pause, it's not just factory jobs at risk. Construction, suppliers, and local businesses all feel the pain and uncertainty. Over 1,500 Toyota and Honda dealerships employ hundreds of thousands more people nationwide. Higher prices and lower sales threaten these small businesses and their workers' livelihoods. The fear: a slow decline, as future investments shift to countries with more stable and predictable trade policies. The very jobs tariffs aim to save could ultimately be lost in the long run. Communities built around these plants face real and lasting economic hardship. The ripple effects are wide, deep, and often devastating for families. The stakes are local, not just national. They touch every corner of America. For perspective, we spoke with Dr. Evelyn Reed, a leading economist on global trade. She says separating US and Japanese auto industries now is like trying to unscramble an egg. They're deeply intertwined. Modern cars are global products, with parts from multiple countries. Tariffs disrupt this system, adding costs and inefficiencies everywhere. Dr. Reed doubts tariffs will bring jobs back. Building new factories or supply lines takes years and billions in investment. Companies are unlikely to make big moves based on policies that could change after the next election. The uncertainty alone slows growth and hiring. She warns that unilateral tariffs weaken America's credibility and can trigger global retaliation. The result: less trade, fewer jobs, and higher prices for everyone. Supporting American workers is vital, but tariffs are a blunt tool that may do more harm than good. The global system is fragile, and everyone stands to lose. This is a turning point for US-Japan relations, built on decades of economic partnership. The auto industry has been a symbol of both competition and collaboration. Tariffs threaten to replace cooperation with confrontation, risking broader diplomatic fallout. If tensions escalate, Japan could retaliate, hurting US exporters and sparking a wider trade dispute. Automakers may shift future investments to more stable markets, leaving the US behind in new technologies, but there's still a chance for negotiation. Lawmakers, industry groups, and diplomats are pushing for a deal, perhaps a new agreement on investment and production. The right policy could support American workers without dismantling decades of progress. The choice is between escalation and compromise. The outcome will shape not just the auto industry, but the future of US-Japan ties. The stakes are global, but the impact will be felt in American towns and families. The next steps matter for everyone. So where do we go from here? The story of these tariffs is still unfolding, and the coming months will be critical. The real risk isn't a sudden exodus, but a slow erosion of investment and jobs. The choices made now will determine if the next generation of automotive innovation happens here or elsewhere. This is about more than cars. It's about America's place in a global economy. Staying informed is our best tool for understanding the stakes and shaping the future. Thank you for joining us. I'm Lester Holt for NBC Nightly News. Good night.